In this video, I will show you an easy scalping strategy that can be used on the 5-minute time frame for quick profits. It is also possible to use it on a higher time frame. In my strategies, I always use at least two indicators, one of which is used for showing trend and the other for showing momentum. The third one would be for volatility. This way we are able to adjust our trades according to what is happening with the market at any given moment in time. As you all know, when it comes to crypto trading or Forex trading, nothing is guaranteed. Every strategy has its own risk and reward ratio, which means that if the benefits are bigger than the risks, then there's a good chance we can make money with it. The same goes for this scalping strategy, because while I cannot guarantee you will make money with it, I can guarantee you that you won't lose any money either. The crypto and Forex market is a volatile one. In this video I am going to show you how to use an indicator that will help you find the best trades as well as minimize risk. To do this, we are going to be using a triple indicator system for quick profits. This strategy is pretty straightforward. You only need to make sure you are using the crypto trading signals properly and that you understand how each indicator works. Then it's smooth sailing from there on out, as long as we use our emotions in check so we don't get caught up with greed, which can lead us making unnecessary mistakes during crypto trading. That's it. This crypto trading strategy is pretty straightforward and easy to use. It can be used on a 5-minute time frame for quick profits or on higher time frames as well, but in this video I am only going to show you how to do it for the 5-minute time frame because that one pays out better than anything else. I will show you how to use this strategy step by step, so it's very important that you watch the entire video and follow each and every step, because if you miss one of the steps, there is a high risk that this strategy will not work for you. Also, support my channel by giving this video a like, click the subscription button and also turn on notifications, so that you get notified whenever I upload a new video. So now let's go through the strategy step by step. So the first step is to add indicators to the chart, so click the indicator button in TradingView and search for EMA, then click the moving average exponential indicator twice, 1, 2, and then go to the settings. For the first EMA and change the length to 50 and then change the color to yellow. You can pick any color and I prefer to make the line a bit thicker. Now go to the settings for the second EMA and change the value to 200, and I prefer to use a blue color for this one and a bit thicker line just like this. This blue line right here represents the 200 exponential moving average. Now this is what we are going to use to determine a downtrend and an uptrend. The basic information here is that, when the price is below the 200 exponential moving average, the market is said to be in a downtrend. But when the price is above the 200 exponential moving average, the market is said to be in an uptrend. An example of an uptrend is shown right here, when the price broke the 200 exponential moving average. As you can see, the price continued in an upward direction. If we go further in price, you will see that the price continued in an uptrend. Now let me show you a quick example of a downtrend. Right here, you can see that the price broke below this 200 exponential moving average. That was when a downtrend was confirmed, as you can see that the price continues to go lower in the. So this is an example of how I use the 200 exponential moving average to show me whether the market is in an uptrend or in a downtrend. The next step is to add the last indicator. Now first things first, let's go over the indicator section here. So if we type in Wu Manchu, we can see Wu Manchu cipher B plus divergences by the Wu Manchu. Put that up on your screen, and it's going to look like this. The Wu Manchu cipher B plus the divergence indicator is an all-in-one oscillator that combines 5 algorithms, some well-known, some custom, that have all been fine-tuned and smooth for optimal analysis and trading results. As we can see, this indicator generates circles, waves and slant lines. The little circle appears at all wave trend, wave crossings. The green circle wave trend waves are at the oversold level. This signifies a potential bullish move below the baseline. Here's the baseline, which acts at the scale level of 0.00000. As we can see here, the red circle, the wave trend waves are at the overbought level. This signifies a potential bearish move below the baseline. Take note that we are not going to be reading all of these in these strategy, so we will need some changes in the Fu Manchu indicator. Go to the settings. And under the input, we are going to untick the regular divergences. We will also get rid of the stochastic RSI as well, then we'll go into style and get rid of the VWAP. Okay. So now it's going to be looking quite a bit more plain. Now we only have the money flow, which is this red and green. Notice that the money flow is red when it's below the zero line and green when it's above the zero line. Down here, at the bottom, this is the same thing. So we have money flow shown down here and also here. You can just get rid of one of them if you don't want both there. Now let me show you how I use these indicators in my strategy. We can start by going into the actual rules of the strategy. The rule number 1 is that you can only take longs when price is above the 200 period exponential moving average. And you can only take shorts when price is below the 200 period exponential moving average. The rule number 2 is that you can only take a long position once price has pulled back into the 50 period EMA, such as in these 4 instances. For a short, you could only take a position once price has pulled back into the 50 period EMA, such as in these 2 instances. The rule number 3 is that you can only take a long position if money flow is in the green. And you can only take a short position if money flow is in the red. Rule number 4 is that you can only take a long position when the blue waves are below the zero line. And you can only take a short position when the blue waves have come up above the zero line. Now, let's take a look at some trade examples. Here, we can see that the price of the market is above the 200 exponential moving average. Right now, we have a retest at the 50 EMA, and wave line of the Fu Manchu is below the zero line, and also the money flow is showing green. I will enter a long position once I see the small blue circle at the wave line of the Fu Manchu indicator. Set my stop loss at 0.4% and take profit at 0.8% and let the trade to ride on. Here is an example of a short position. As you can see, the price is below the 200 EMA and we have a retest at the 50 EMA. The wave of Fu Manchu indicator is above the zero line and we have the small red circle on the wave. So we enter short and set our stop loss at 0.4% and take profit at 0.8%. The next step is knowing the potential and using the right leverage. If we go to this profit calculator, and as you can see, if we start trading with just $100 and a win rate of 60%, and we take profit at 0.8% and our stop loss at 0.4%, and we make 100 trades per month and with a leverage of 20%, we could actually make over $15,000 with this strategy. Also, for a scalping strategy like this one, you need an exchange with low fees, and the one that is perfect for this strategy is Bybit. As you can see, when we use Binance for example, the money we are going to make is very low because the trading fee is high. There will be a link to sign up for Bybit in the description below. So you can go and check that out. That's it for this one though. Thank you for watching, best of luck with your crypto trading, and I'll see you in the next one.